We're now going to take a look at audit strategies and audit planning. And we're just going to go through a bunch of information that might help you in understanding how this is done. So we're going to start. First of all, you have to have knowledge of the business and industry. Since this is Nathan's second year of auditing them, he has spent an extensive amount of time getting to know the business and industry. To update this knowledge, he's going to review articles related to the retail industry. He's going to make inquiries of management about any significant changes. Next, we're also going to consider our audit strategy. After obtaining and updating his knowledge of the business and industry, Nathan will develop an overall audit strategy. And that strategy will include defining the scope of the audit, determining the focus of audit team efforts, determining the allocation of resources, and making required communications. Next, we're going to see his audit plan. The audit plan is based on the audit strategies and will outline the detailed nature, extent, and timing of the work. Are we going to do a lot of control testing or basically rely on a lot of substantive testing? Are we going to do a lot or a little of either one? And will we do a lot of it at interim or will we do it at year end? Nature, extent, and timing. Let's go on to the next item. Based on Nathan's knowledge of Creative CPA clothing business and industry, he will start defining the scope of the audit. Here's a brief excerpt of the scope. Characteristics of the engagement. Well, they're using the US dollar. Their financial reporting basis is GAAP. They're located in California. The corporate and 2 of the retails, Arizona 2 retails, and Georgia 2 retails, and Illinois. The industry specific, it's a retail industry. The size, it's a small entity with relatively few complex transactions. The only ones would be some derivative or hedge activities. And the use of service organizations, nope, they don't utilize any of them. Let's try the next slide. The audit strategy will also help determine the focus. The preliminary evaluation will be needs to be determined. We'll call that later. Then material account balances. We're going to look at sales, cost of goods sold, and inventory, primary items that have a huge impact. Inventory becomes cost of goods sold, sales become your receivables, and then cash. Obviously, the operating cycle is tremendously important here. Areas with higher risk of material misstatement, sales, and of course, accounts payable. Industry developments, there's been increased competition, and with increased competition, that means there's more pressure on you to meet your numbers, and more pressure means higher assessment of risk. We have accounting changes. Well, there's a brand new revenue recognition rule. That means they're trying to implement it. They're trying to run parallel with the old legacy rules and the new rules, and maybe the new rules aren't giving them good answers, so there may be some pressure to interpret them incorrectly. So that's going to raise our audit risk. And then management's commitment to the design and operation of internal control. They appear to be very committed. Remember, that's the foundation, the environment that you're in. It seems to have a very good tone at the top. Several new controls have been implemented in year 2. Let's move on to the next item. And that is, we can take a look at resources needed. The involvement of other auditors? Nope, we're going to be good with just our team. Specialists? Well, utilize specialists to assist in the auditing of derivatives, because maybe I'm not as good at as I'd like to be. Internal auditors, we'll involve them, but we'll have to learn how much we can use them, what we can use them for, and what we can't use them to do, and therefore they wouldn't really help improve our efficiency. Audit meetings, we're going to have a kickoff team meeting, and we're going to call that on a certain date to discuss risk assessment and fraud. And we're also going to look at budgeted hours. We're going to take a look at that one too. So let's go to our next item. Nathan, the senior, is updating his prior year budget. Below is an excerpt of the audit budget based on the following facts. He needs to determine whether the audit hours for each related account and cycle will most likely need to be increased, decreased, or stay the same. So fixed assets. Last year, the company purchased all new equipment, approximately 75 machines, to manufacture t-shirts. This year, no new machines were purchased. However, the company did purchase one small building. Well, in that case, you do have a major item. You're going to want to check the loan agreement. You're probably going to want to double check the asset. You're going to want to check the calculation of depreciation. But remember, last year, it was 75 machines. So we're going to see, last year, this was the amount of budgeted hours. So how will that impact this year? Chances are fixed assets will decrease. Why? 75 new items versus 1. Granted, the 1 is large, but the bottom line is it's 1 item. Equity. In year 1, the company issued 50,000 shares of stock. In year 2, the company issued a comparable number So we're going to want to check how much was issued, the stock price, additional paid in capital, etc. So we're going to see last year, this was the amount of budgeted hours. So how will that impact this year? Probably stay the same. They issued stock last year, they're issuing stock this year. We're also going to look at contingencies. Last year, there were no lawsuits. However, this year, the company is engaged in multiple lawsuits with only one probable of being a major material loss. Probable and reasonably estimatable. We're going to want to talk to management about how they came up with that estimate and maybe verify it by getting a legal representation letter. So we're going to see last year, this was the amount of budgeted hours. So how will that impact this year? That's probably going to increase because for the first time ever, we have a legal issue that might result in a material loss. And the revenue cycle, sales increased by 50% from 1.2 million to 1.8 million. Management has attributed this to an increase in demand because a celebrity was seen wearing the items. That might have been Sugar Bear Olinto was wearing those clothes. And everyone who's a CPA candidate said, I want to look like Pete, right? So in this case, that meant that they had a new product line, and that's going to add additional concerns for us. And finally, the revenue cycle, certainly going to increase. If revenues increase, you've expanded the business, you've added new lines, that adds a potential for all sorts of problems. So we're going to want to do a little bit more investigation. So having looked at this, hopefully now you have a better understanding of the planning, and we're ready to move on.